What's going on, everyone? It's your boy Tony on the charts. I just wanted to do a technical analysis video dedicated to Bitcoin and some of the methods that I use from higher timeframes to lower timeframes, while introducing some names of other methods that might become useful in your own trading journey. So generally, the kind of approach that I try to apply is just one of three simple steps, which is analyzing timeframes from high to low, PVSRA, which is price volume support resistance analysis, while searching out for imbalances and confluence. So that might, a confluence being looking for confirmation across a range of, that might be indicators or any other information. So which we'll look at some examples. The first thing that we're going to look at is going from the higher time frames to low ones is this monthly chart right now on Bitcoin. And I guess the first thing to kind of point out is that this is in kind of a linear scale, and by linear scale I mean each box here represents an equal value. In this case, $5,000. And a lot of the kind of analysis that I'm going to look and go forward is on a logarithmic scale. So if I just click log, for example, you see how it changes the entire kind of appearance of the chart, because whereas down here this box represents $10, up here this box represents almost $4,000, because that scale was going up exponentially, which is obviously important for something that's been moving like it has at an exponential rate like Bitcoin. And I guess the only reason I'm pointing that out on the kind of monthly chart, which is interesting, is when you start to look at Bitcoin logarithmic curves, which a lot of people got slightly varying ones, but I just wanted to introduce this one and then share this website looking into Bitcoin, which has a whole host of different kind of charts and indicators, and then introducing this very well known Bitcoin rainbow price chart indicator, which kind of maps these logarithmic curves across a long time frame, all the way from 2012. And it kind of shows how price does kind of respect and obey these larger bands. So at least from the kind of on a monthly and a long term on maybe a hodler scale, and we've seen the break for the first time below these logarithmic bands. But that break, that dip right there, being the FTX collapse. So question mark about whether we can just call that a black swan event. Is that a one-off, and now we've kind of come back into the charts? And it'll be interesting to see how we observe that going forward. So I'm just going to be using this chart of Bitcoin against Tether US, but this is just ever so where I've just kind of marked up, but this is all information from 2018. Again, this is on the monthly, and this is logarithmic. So the first thing, when I'm talking about and observing timeframes from high to low, I'm going to be plotting any kind of key levels from the monthly to the weekly to the daily, to be understanding kind of how price respects and observe these. And obviously those on the higher time frames take on greater importance than those on the lower time frames. So for example, here are based on where we're kind of hovering at and around now, here's an example of a collection of monthly levels that I've highlighted. How we can see here 2 points on the close, but then on the rise up, close, the resistance flipped into support. Then above here we've got the wick that comes all the way down, that was formerly resistance that became support. And then either after, that's in November 2020, and then coming all the way back to here more recently in June 2022, we see how that wick respects that level as support moving forward. So we've got the monthly levels on this time frame, and then even below, if I go to the weekly, understanding how obviously once we break that down even further, there are now more candles where there has been some observations of kind of price data respecting those. And again, I've just kind of focused on this half of where we're kind of hovering at. Obviously there are more further down, and I guess once we've got, at least I'm going to show at this level, my personal kind of preference of applying a little bit of linear or traditional technical analysis. And by that I kind of just mean almost the kind of the pattern watching, understanding how things are observing and moving in between some of these greater moves. So I've just kind of plotted against maybe these larger pattern moves in the white, and then in pink some of the smaller ones happening within them. But if I turn off the levels for clarity, you'll see, for example, this larger falling wedge, which generally suggests, a positive breakout. Some measure it by the length of the pole that kind of almost like it formally broke out, which, is a rudimentary tool that gets kind of rudimentary results in that sense. And then as we kind of broke out, a lot of sideways movement, not unusual for a breakout to kind of grab liquidity below these levels. But then we've kind of got this formation. This is all from 2019 to 2020, of this kind of double bottom. So strengthening that support, as suggesting a kind of a reversal pattern. And then as we kind of like move up to present day, still on the weekly time frame, so each one of these candles representing a single week, we have the kind of the breakout and then the rising wedge, which shows some signs of warning that we should have maybe taken into consideration, and then definitely signs of warning when we eventually got the formation of the double top, with the kind of the price that hit, what was that, 65k, and then subsequently 69k with Bitcoin before the big reversal. And then ever since then we've basically been trading, moving constantly within this falling wedge, and all of the question and excitement now surrounds, what is this? Is this going to be a fake breakout? And are we going to slip back into the falling wedge, or hopefully, and for reasons we can look at on the lower time frames, are we going to test this as kind of this former resistance band as support for a kind of a continuation to the upside? So looking into that kind of linear TA, and I do believe personally at this kind of time scale and time frame, there is a lot of relationship and overlap between a lot of adjacent theories. So the kind of the one that I don't like to trade off, but I do respect, and I think everyone would benefit from knowing of a little bit, is that of Elliott Wave theory, the kind of theory that the market moves in directions of 5 waves, and then 5 impulsive waves, whether that's up or down, and 3 corrective waves, which is and these are formally marked off as 1, 2, 3, 4, 5, and ABC. And the interesting thing about this is that it's fractal in its very nature. So just kind of going into, as you can see in this diagram, within the wave 1 you'll have the 1, 2, 3, 4, 5, and then within the corrective wave, i.e. the 2, is the ABC. So even this larger 1, 2, 3, 4, 5 in itself could be a 1, 3, or 5 in that direction. Now in terms of Bitcoin, and just in terms of this kind of weekly chart, and I guess this is the kind of question on everyone's lips, is kind of if you were to go into the lower time frames, you can, and I have done previously, confirm or question the count to find that fractal nature. But here we can see, we have got a clear kind of five wave impulse, and not to confuse too much, but there are other variations of notation for more complex corrections. But have we finished a correction, this complex correction? If this is the one impulsive wave, are we about to start another? Which, as we know from a lot of the other videos with Tom from Greenstar Trading and others, people who really fully believe and take these counts and all the kind of possible variations, there's room to believe that it could be an impulse kicking off, which will be interesting to see. And that obviously suggests the idea of we could have a further retracement, the test, and the continuation. I'll just share, I've got here just an example of my own kind of notes, because I guess what's important about Elliott Wave, and not exclusively, are the kind of concepts of Fibonacci retracements and extensions. So this this is exactly what we were just looking at, the kind of the 5 waves and then the fractal nature below it. But at the same time, there's kind of like natural levels where these kind of depths retrace to, so there's a more popular, like how far, and rules for these to observe. So for example, a wave 2 can never go deeper than a wave 1, so it can't come below that level. So then that would suggest it's a different wave formation than, this simple 5 wave impulse. But what I mean by the Fibonacci, I'm just kind of going to flick through to kind of share the lots of variations of the forms of corrections, running flats, expanded flats, triangles, etc. I guess the interesting thing about the kind of the Fibonacci nature of these things, if I was just use the Fibonacci tool here and go from I mean, I like this wave 2 example, and then go to the, even like the wave 3, how often you kind of express as the golden pocket, this like 61 to 65% Fibonacci retrace, how well that, this pullback kind of observes that, and whether you don't even want to use that wick, you go to the candle, I mean, it observes it perfectly, zooming into that, like hits it twice before continuing to the point to complete the fifth wave. So that's just what I mean as a kind of brief introduction and understanding of kind of Elliott Wave on that anyway. And I guess before we go down and further into the daily level, is the kind of question at this time frame of maybe the importance or the application of kind of Wykoff. And what I'm kind of just when just kind of talking about Wykoff is just the general principles of this movement of capital from areas of accumulation, where there's there's a very sophisticated different forms and notation for the build-up of liquidity from these phases of accumulation to distribution, i.e. smart money, institutional or otherwise, accumulating at lower prices to kind of move price to a higher place for the distribution, i.e. the sale of that, and or commonly referred to as people like to say, the exchange of from smart hands, to from smart money to kind of poor money, to bad judgments, retail investment, people assuming that the rally is going to continue forever, but actually it's lived its life, and then it's the markdown and the kind of pullback that takes place by the smart money, and this process going on ad infinitum. And what's interesting about that is not only how it can, and for reasons I'll show, operate at these high time frames, but also at the much lower ones. The kind of liquidity in the market, the liquidity provided in the markets, and how that happens. And as I'll show, down to the 1 and the 15-minute charts. And the only reason I'm just bringing this up is here's just one example of the accumulation schematic from the Wykoff events and phases. And it's just an interesting question mark about, again, are we bottoming out? Are we going to touch low, which would be the former resistance line of the larger falling wedge for a continuation outwards? So this kind of notation breaks down this accumulation phases into these 5 phases. So phase A consisting of the preliminary support, and that dropping down to a selling climax, naturally towards an automatic rally, and to a secondary test, which kind of loosely completes this phase A. And then we've had the rallying strength off of that, and then Monday the 7th of November, FTX collapse, but not unusual I'm glad that this example shows the secondary test lower than the selling climax. Sometimes quite often, obviously, liquidity grabs take place. And then the kind of question mark, the thesis supported on a thesis, which I'll show on the lower time frames, and in a moment, of are we going to see lower prices momentarily, before kind of continuing onwards. And the kind of reason I say that, and I guess I'll introduce some of the kind of confluences and the other kind of indicators that we might look at to kind of support and validate some of these ideas, is mine on the most simplest one is the RSI, and the RSI in itself just being a simple momentum oscillator that measures the speed and change of price movements. And I guess the reason I kind of just say that, why that's important, is people are constantly looking for divergence and convergence between price action and the actual kind of strength of the kind of movement itself. And then with these two pink lines that I've shown, almost suggesting the falling wedge, which from a linear TA point of view suggests the outwards break. This is further supported by the fact that, on the RSI you usually have oversold conditions underneath the 30, and then overbought conditions at the 70. But here we have higher highs and higher lows, which totally contrasts to the price action of lower lows and lower highs. So, it suggested that there was going to be, something had to give for price to kind of reflect the actual kind of movement and behind it, the kind of strength of these moves. The interesting and important thing about the RSI and looking for confluence in these areas is if I just turn off this and go to the monthly, I think it raises a really important, just a show on here, we'll just get rid of these, what it says about when we reach that kind of double top, looking back in, what was 1st of April, not a April Fool's joke, and then the 1st of November. But we've got price doing, as we were kind of saying, these observing these higher highs at this time, and then what would have been when we didn't know it was breaking down, these higher lows. But during that time, there was massive divergence between the lower lows and the lower highs on the RSI, which kind of was suggesting that behind all this, behind that top, the kind of the fundamentals and the strength underlining that price action was suggesting a breakdown. So the importance of kind of seeking confluence and obviously not just acting on patterns or worse, emotion at that point. So if I'm just going to go down to the daily level, just refresh that, the same principles of what I was just kind of describing of, the finding the levels on the monthly, the weekly and the daily are obviously important for us to get an understanding of what's going to, on that subject of support and resistance, where is price going to gravitate, find difficulty, etc. And even if I turn off the daily, like for example, look at all the difficulty that we're finding recently with the monthly level over the last essentially week or so in trying to kind of break that, and then that subsequent breakdown. What's interesting, if I go down to the 4-hour level, and this is where I'll share one of the trades that I kind of took out based on this, was precisely this. And I guess what's important is that no single approach or analysis suits all time frames. So I think there needs to be a flexible approach to these. I wouldn't personally like to apply Elliott Wave on the smaller time frames. So, I like to observe it, to have a general understanding from the daily and the weekly upwards, but I'm not going to be applying that on the hourly. I know others like to, but that's just not my personal preference. So as we start kind of getting down to these lower time frames, I guess the thing that I like to look at, and one of my favorite indicators that I would kind of encourage, which is going to look crazy as soon as I kind of click onto it, is traders' reality. And I'll explain that in a moment, but this just shows again the clear-cut divergence with a whole series of breakdown of the strength behind the price of lower highs, lower lows, and during that exact, that's starting from here, and so here we've seen we've got a whole higher high, higher high, higher high, move this. That entire kind of almost upwards channel is totally in kind of conflict with what was kind of going on with the underlying price, which motivated me to think that actually we're going to see a breakdown, especially with the monthly level there. So on the subject of confluence, so my trade was right below that monthly level of a short, taking it down, thinking we're going to come back to find was there particular levels, come back to test these lower levels, or this lower this region of trading where, as I said in this green box, the top of this green box was my first take profit, which we've hit. No surprise right now. If we zoom in, price on the 4-hour chart is kind of hovering around the daily level and kind of consolidating a little bit. It's the weekend, not a lot of liquidity in the markets, but I totally anticipate that we can fall back into thinking of the kind of, this is what I mean about the Wykoff method on these lower time frames. You get this sideways movement, accumulation, distribution, and something that suggests that we're going to kind of fall back into that. And the reason I kind of think we're going to fall back into that is, as I said, about my 3 principles that I kind of play by: time from high to low, PVSRA, price, volume, strength, resistance analysis, and then searching for those imbalances and confluences, is because fair value gaps, when you start getting onto the lower time frames, these kind of gaps of liquidity left during the move down in price due to no buying pressure. What's really great about the trader's reality indicator, which I'll just turn on, is the kind of display, and we'll move away from the RSI momentarily, is the kind of display, the change of appearance to these candles. And the reason why it's important and really useful is that these uber green and uber red candles, what they represent is twice the average of volume of the previous 10 candles. I.e., if we count back, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, like all of these candles, the amount of volume that is going into them, this is 2x the volume in one single candle. And what's interesting just about pointing that out are how that suggests there are kind of obvious imbalances, intention to move the market in a certain direction, and that kind of presumably, obviously, that coming from an authority figure who is able to have those influences on the market. But usually, what we're just saying with fair value gaps and imbalances is that usually price comes back to those levels. I like to, comes and returns and taps into those vectors. Look at that. We've entirely, essentially retraced it, and a question mark about how much further we are to claim the candles below. But I like to kind of compare fair value gaps and imbalances as like holding a ball underwater. You can manipulate it. You can physically exert force